Hi everyone, welcome to the second panel of the Climate Smart and Climate Ready conference. Today we are in the second day of this conference, third day I believe of this conference, which is fantastic, and thank you for being here. I did have my introductory remarks written down on a piece of paper, but I seem to have mislaid my piece of paper, so I'm going to just wing it, which the first thing I wanted to mention is that in our opening plenary session just now across the street at Cinemapolis, one of our presenters mentioned the Biggert Waters Flood Insurance Act, which has just gone through Congress and was signed by President Obama, I believe, on July 6th, 2012. I just went and looked it up very quickly because at that session, someone said we don't know what the Biggert Waters Flood Insurance Act exactly did, so I took 15 minutes to go look it up. And what I learned, and Dave will talk about it more, is that this is an effort by the federal government to address some of the changes in insurance that are going to be coming down the pike because of the increased flooding that we're seeing. And also coincidentally, and just as an anecdote that shows the organic nature of this conference, yesterday we had a panel on your legal practice and climate change. And Dave presented at that as well, along with a local attorney who spoke about municipal regulations. And after that panel, one of the audience members sent me an email pointing out a news article about landowners in the Hamptons who are protesting how their insurance is changing as a result of flooding. Well, now, folks who own property in the Hamptons tend to be of a certain income demographic. And the fact that they were able to protest in a way that brought it to news worthy of printing in the New York Times, such that an article was forwarded to me as relevant to this conference, I think says something about the level of interest that climate change and flood insurance concerns are bringing to our population. It's not just going to affect the most vulnerable of our communities, it's going to affect the people with money too, and that's how the interest is starting to gel. Talking a little bit more about insurance and the money piece of this equation, I have Dave Ferris, and someone found my papers for me, thank you so much. And so I will say, Dave Ferris is the CEO and owner of P.W. Wood & Son Insurance, a general insurance agency, and the president, owner, and founder of Central Risk Managers, a risk management and insurance consulting firm. Since 1964, Dave has been licensed in the insurance business in more than 30 states with clients in the United States and abroad. He specializes in providing risk management services to a variety of clientele, including organizations, colleges, and municipalities. Ferris has taken this specialization further by hosting courses at Cornell University and Ithaca College about advanced risk management, as well as other related continuing education courses for numerous other organizations. And as I said yesterday, he provided a continuing legal education through the Tompkins County Bar Association for attorneys in our community who are interested in these concerns. Dave has a PhD with the following professional designations: Associate in Risk Management, Chartered Property Casualty Underwriter, and Accredited Advisor in Insurance. Dave was one of the first in the country to be awarded the Continuing Professional Development designation by the Insurance Institute of America, and he's presented at many conferences across the country. We are very fortunate to have Dave presenting here to us on risk and liability in a climate change world. Thanks very much, Dave.
What I'm going to be talking about today, first of all, the first part of my discussion is going to be how climate change is impacting the insurance industry. And then the second part of it, I'm going to talk about some things that you may consider in your own personal life as far as property insurance that you may have on a home or a condominium, or if you're a business person, your business insurance. And hopefully we can get through this at a time when, and afterward I do have some handouts that are connected to this if you want to take it with you. Years ago, there was a United States Senator named Everett Dirksen who was very well known for saying $1 billion here, $1 billion there, and pretty soon it adds up to real money. In 2012, there were 11 extreme weather events that happened across the United States that killed thousands of people and cost hundreds of billions of dollars in damage, a lot of which was insured and a lot of which was not insured. We consider an extreme weather event any event that costs over $1 billion in damage. And in 2011, there were 14 extreme weather events, including Hurricane Irene. And we dodged a bullet here in Ithaca when it came to Hurricane Irene. If it had shifted 40 miles north and 40 miles west, we would have been right in the middle of Irene. And if any of you traveled out east of here after Irene went through, if you went out through the Catskills or you went up around Albany area, out through Oneonta and those areas, you could see the unbelievable devastation that was caused by Irene. And that's why I say we dodged a bullet, because it didn't have to shift very far to happen here. And this type of weather scenario is the type of thing that is impacting the insurance industry significantly. We all know about Superstorm Sandy because it was such a recent event. I have a lot of clients on Long Island and in Westchester and in Connecticut, and it was an event that impacted them but impacted us in our business, because a lot of those properties that they had down there, we insured. And so the wind damage that occurred, and it was interesting because Superstorm Sandy was considered a hurricane right up until it hit the land. And it never was actually declared an official hurricane. So the insurance applied differently because it wasn't a hurricane than if they had called it a hurricane. There are ways that the insurance industry has protected itself from what they call hurricanes by changing the way the deductible works in the insurance. Now, those of you that own property and have it insured, most likely you're probably dealing with deductibles in your insurance of maybe $250 or $500, maybe max $1,000, because you don't get enough credit on your insurance if you take higher deductibles than that. But windstorm damage, if they declare it as a hurricane, the insurance changes from a dollar amount to typically a percentage amount. And quite often, the most common one is about 5%. So if you have a $2 million house sitting in the Hamptons on Long Island, and you have it insured for $2 million, instead of having a $500 deductible and you lose that house, you're going to have a 5% deductible, which is a significant higher amount of money that's going to come out of your own pocket. Does anybody here, by any chance, own any property like down in the Carolinas or Florida or anything like that? Those people have been living with this for years because of the number of hurricanes that strike Florida, Mississippi, Louisiana. They have had these 5% wind deductibles for a long, long time. They've had to live with them. And what we're starting to see now is that the insurance industry is now starting to increase the deductibles even upstate New York, because we are having storms up here. We never had tornadoes. Now we're getting tornadoes. We never had the really high wind storms, but now we're starting to get high wind storms up here. So the insurance industry is changing the way that it is even writing the insurance policies in our area. You might wonder, why should I worry about what's happening on Long Island or what's happening in the Carolinas or happening in Mississippi? It's because insurance is a global thing. And the insurance companies spread risk. And their way of spreading risk is to change the way that they're looking at the way they write insurance even up here to help cover the costs of what they're losing in other geographic parts of the country. If you look at Superstorm Sandy, I know a lot of you probably read this in the papers, but I want to bring it up again. There are over 450,000 businesses in New Jersey, New York, and Connecticut that were damaged or destroyed by Hurricane Sandy. That's a staggering amount. And a lot of those businesses still haven't gotten back in business today and may never get back in business. There are over 8.5 million people that were left without power for very long periods of time. I looked this up about a week ago, and there are still over 1,200 claims from Hurricane Sandy that haven't been resolved yet. Some properties are never going to be rebuilt. They are just not going to let them rebuild in certain parts of New Jersey, New York. And of the $80 billion in damages, $60 billion of that was covered by insurance. Think about the other things that happened last year that were all weather-related events. Drought was significant all through the Midwest, affecting grain crops, corn, soybeans, a lot of the things that drive our economy. Wildfires burned millions of acres and thousands of pieces of property. And tornadoes crisscrossed the country, and they're still crisscrossing the country. And this year, they're projecting it probably will be even worse. This is a number that you might find quite interesting. Last year, the projection was that 52% of the hurricanes that they were expecting would probably strike the East Coast. This year, they're projecting more hurricanes, and they're projecting that up to 72% of them could strike the East Coast, and meaning all the way up through to Maine. Not only just Florida and the Carolinas, but striking New Jersey, New York, Connecticut, and up through Maine. I mentioned this yesterday in my talk. In 2007, I was asked to chair a panel as part of a conference that was conducted down in Long Island. It was called the Long Island, New York City Emergency Preparedness Conference. And it was all of the mayors and village officials and city officials and emergency preparedness people with fire departments, police departments, EMTs, whatever, on what would they do if they had a major storm strike the Long Island, New York City area. Now remember, this is 2007. We put up charts and graphs that showed them that if a Category 1 hurricane hit Long Island, New York City, the damage it would do. And it was like we were looking right into a crystal ball because it happened last year with Superstorm Sandy. Long Island, the highest point on Long Island isn't very high. And actually, if a Category 2 hurricane hit with the same force and driving winds, it could theoretically completely overrun the whole island. And there are 8 million people on Long Island. And if you've ever been down there, there's only 2 bridges coming north. And you can't even get over them during rush hour. Can you imagine trying to evacuate Long Island with a main storm coming? You'd have to start now, just to get half of them off of the island. So it is a serious, serious thing down there. And I want to talk something about insurance company finances. People think insurance companies have all the money in the world. Insurance companies only have 2 ways to make money. It's from what they charge to write the insurance, commonly called the premiums, and the money they make on investment income with what they have left over after they paid administrative overhead, and the money they pay out in claims, the money they have left over, they can invest. Well, what are you making on your investments today? Not much. And neither are the insurance companies. And this is causing a significant problem. If you remember, we had a financial crisis in the financial world not too long ago where insurance companies got risky, put money into very risky types of investments that they weren't even supposed to be doing under regulations, and they got hammered. And the government bailed them out. And those bailouts, you read in the papers that they paid us back. They haven't really. I mean, some of the payback they're paying back with the money they were given in the first place because they didn't use it for anything. So the money just went in a circular motion. But now insurance regulators are requiring the companies to have a lot more capital, a lot more money in reserves. And with the stress that's being put on the industry with the claims they're having to pay out, plus the reduced amount of money they're getting from investment income, they only have one choice. They're going to have to raise rates. So as a result of all of this, we're going to see some significant impact on the way that they are writing insurance. Just to talk a little bit about the type of insurance I'm mentioning here, I'm not talking about liability insurance. I'm talking about insurance that covers property and loss of income. Personal insurance, property insurance are things like a homeowner's policy, a tenant's policy, condominium policy. Commercial insurance is what you write on a business, like this building would have a commercial policy on it. Whether it's a for-profit organization, a not-for-profit organization, could be a school, could be a municipality, a governmental entity. But those are commercial properties. And in businesses, anybody here own or run a business? A business owner, to protect their loss of income, will include loss of income coverage in their property policies. And is there anybody here that isn't aware of what they've been going through up in Boston? This is a very unique, interesting situation. After 9/11, the federal government paid out so much money as a result of 9/11. The federal government paid out. They adopted a law about terrorism insurance. And if you want to have yourself covered as a business for terrorism losses, you have to specifically buy it attached to your property and loss of income insurance. This is the first time since that law was passed that we've actually had a terrorist event in the United States. And this is going to be considered an act of terrorism. Now, what does that mean? That means that all of those businesses in the greater Boston area that have been shut down all this time and could not do business, could not conduct business, could not make money, retail or whatever, if they didn't purchase that terrorism rider on their insurance, they have no coverage. And because there had been no terrorist acts for years, businesses stopped paying for the terrorism insurance. It's like we aren't using it, why pay for it? This is going to bring it home to a lot of people because it happens so fast and so quick. And there are going to be a lot of businesses up there that probably will have no coverage for their loss of income for all that time they were shut down this whole week. And they said the impact on that greater Boston area was billions of dollars. So it'd be very interesting to see how all of that plays out. Another thing too is what they call contingent income. Loss of income insurance on a property policy is paid if there's direct damage to your facility. However, if you have a key supplier or you have a key client that gets knocked out of business by a tornado or a hurricane or a fire, and they can't either supply you as part of your supply chain, you can't get your raw materials or your goods to sell if you're a retailer, or you have a key client that can't buy from you, unless you have what they call contingent income, loss of income, you don't get paid either. And I'm going to be very frank. I have taught continuing education courses for the insurance industry for many years. In fact, I just stopped doing it about 2 years ago because it was taking up too much of my time. The insurance industry and the people that represent it don't do a very good job of talking to people about how to handle their loss of income insurance and how to handle contingent income insurance. It's one of the worst things that they do as an industry. And in my consulting business, this is one of the biggest mistakes I find when I do consulting for clients about their insurance programs. It's one of the biggest holes I find in their insurance program. It's just not written very well. Yes?
I know it would completely vary the size of the premium depending on what's being insured, but maybe on a percentage basis, how much extra would it cost a business to buy the contingent income coverage
as it's actually quite minuscule. It's very inexpensive coverage compared to regular coverage because it's not something that happens very often. But when it happens, it can be devastating to the business that doesn't have it. And in 9/11, if you can remember back to 9/11, everything from 14th Street South was shut down for a long time. And all those businesses down there, the ones that went out of business were people that didn't have their insurance properly written to cover their loss of income from those types of events, because they were not directly hit. They were just shut down by government authority, and they hadn't properly written their insurance to cover shut down by government authority.
Do you have to know in detail in an insurance policy who exactly is upstream and who exactly is downstream? You can name them in advance?
To be properly covered, there's a very detailed process you go through to check what your loss of income exposure is. And the reason I'm spending some time on this is because with all of these extreme weather events, you may not be directly impacted, but the people that supply you or the people that buy from you can be knocked out. And if you haven't had your insurance written properly, you're in big trouble. You may not have lost your building or lost your offices, but if you've lost your income, your revenue source, that's what puts you out of business. That's really what gets you. Flood insurance. Flood insurance is, up until recently, was entirely underwritten by the federal government. Now there's a reason for that, because a flood is so catastrophic that most insurance companies can't get enough premium to cover what their potential losses are. We were having a discussion about the fact that these companies that do fracking for natural gas, they can't get insurance to cover the environmental damage they can do because there simply isn't any insurance company that's big enough to take on the risk to cover the potential environmental impact that could happen. So many of those companies are operating without, quote, the environmental liability insurance that they would have if they were, if they do damage by wrecking the environment. Maybe they could destroy an aquifer, an underground aquifer, or some other thing where they do a significant amount of potential environmental damage. Insurance companies will only write insurance when they can make money. I mean, it figures it's natural. They're not in the business to lose money. So if they can't get enough premium and investment income to cover the type of risk, they aren't going to write it. And we're seeing that change happening with insurance companies because of these extreme weather events. They are changing the whole way they're underwriting. And Leslie mentioned this Bigger Waters Act, which is substantially changing the way they're going to write flood insurance. Because the federal government was basically subsidizing flood insurance, the premiums that they were charging, that the government was collecting, really wasn't coming close to offsetting the losses that they were seeing because of, again, the extreme weather events that we're seeing, which is causing more flooding. They actually let the flood insurance program almost expire because they couldn't agree on how to renew it. The Bigger Waters Act was a renewal of the flood insurance program, but under substantially different conditions. Their underwriting of it is tougher. The rates are going up, are going to be higher. And one of the things they haven't really resolved yet is, in my mind, since it is a subsidized program, everybody who's in a flood zone should be required to buy insurance to spread the risk. Because if they don't, guess who picks up the tab? The rest of us. Because the government has to come in and pay, and as a result, the government it's coming out of the general pocket of the rest of the public. Now, there are insurance companies that have figured out, actuaries are people that sit in the back room with eye shades and calculators and figure out what insurance companies should be charging. Actuarially, they have now figured out how to write programs for flood insurance in the regular business market to wrap around the federal government flood program. In other words, you can get higher limits, you can get broader coverage, you can get loss of income. This is a relatively new thing in our business, in our insurance business. It's been around for about a couple of years now. This is going to help to some degree remove some of the stress from the federal government. But it's relatively new, and like everything that's new, we haven't seen how far it's playing out yet. But flood insurance is taking a major, major hit as a result of these extreme weather events, and the government is still figuring out how to handle it. Private industry is still trying to figure out, but it's going to impact everybody up here. I don't know. Yesterday there was some charts that were put up. The attorney that was speaking with me, she put up some charts that showed how some of the communities around here are addressing some of these issues of building alongside of water, like rivers and the lake and things like that. Do you know how the water is controlled in the lake, in the Cuyahoga Lake? Actually, it flows north, and it goes out. The outlet is north. Every year in the wintertime, you'll see the level of the lake is controlled by the Army Corps of Engineers and the people that control the water flow from the north end going out. If Hurricane Irene had hit here and dumped as much water on this area as it dumped in those other areas, there's a good chance that people living along Fall Creek and some areas along the low part of the lake would have been inundated with the amount of water coming over the falls and through these streams. And you say, well, it would have run down and out the lake. I don't know how many of you were around here back in the 80s when the high school was underwater, because the water came down so fast, all this trees and brush and everything formed a natural dam in the creek, and the water couldn't go anyplace. So it just created its own little lake right around the high school. Significant amount of damage to the high school, which the taxpayers had to pay for because they didn't have an adequate amount of flood insurance covering the schools. And that's my point. With these type of weather events, we have to be much more aware of the building that is going on in areas that are subject to flooding or could be prone to flooding with extreme types of storms like Irene or Sandy or anything like that that hits us. You can't just let the water out of the lake, because unfortunately, they've allowed people to build along the entire outlet for the lake. So if they opened up the floodgates, it might protect us in Ithaca, but it's going to wash away the homes that are built along the outlet area through that canal system up there. So as you can see, everybody, including us here, are impacted by what's going on with the insurance industry because of these extreme weather events. So what are we seeing changes now? We're seeing significant changes in the underwriting philosophy of the companies. They are toughening up the guidelines. They're toughening up the pricing. Territorial restrictions. There are insurance companies that have completely pulled out of writing any type of property insurance in the lower New York State area, Long Island, Westchester, and New Jersey, and it is getting tougher for them to get insurance. In Florida, the government actually has a homeowners insurance program because people won't write it for certain areas of Florida. So they had to buy their insurance from the government. And just like, you know, there was a comedian said years ago, if you really don't want crime to pay, let the government run it. And as you can imagine, the insurance companies that the government are running in Florida and Mississippi and those areas are broke because they haven't run it properly, they haven't priced it properly for political reasons. Theoretically, we could see something like that here in New York for those areas on Long Island and the New York City, Connecticut, New Jersey areas. You can see the same thing. So they're changing insurance policy language and coverage. They're making it so it's going to be more difficult to collect on a claim because they're going to change the claims handling process. And we're seeing this developing in our industry right now. it is a steps that the insurance industry is taking to protect itself. And we're going to feel the impact of it. And it's going to be right here in this area. People don't realize that for years, the pricing on insurance for upstate people has included some form of offset for what they can't charge for New York City and Long Island because it would be prohibitive for them. So we are all part of this giant pool. And we can't say, well, if it's happening down there, it's not affecting us, because it is affecting us. And it's affecting us heavily. What does this mean to you? When you're looking at your own insurance, whether it's your personal insurance for your house or your business or whatever. Now, remember, I'm talking about property insurance. You may see some coverage restrictions. You may end up having to pay higher deductibles, and you're certainly going to be paying higher premiums. And as I said, after this is over, I have all of this in handouts for you can take with you. If you have a claim, you could end up in some significant disputes over the terms and coverage. Insurance litigation is going on all the time. In fact, this is how I spend some of my time. I work with attorneys and law firms on interpretation of insurance policies and terms and conditions that they're using either at the time of a loss or later on if there's a dispute where they are representing the client against the insurance company. And disputes with claims adjusters. There's three types of adjusters that insurance companies and you may be involved with. Insurance companies have their own claims adjusters that they're on their own staff. Some of the smaller insurance companies, like some of those that we have here in Tompkins County, we have 3 very good insurance companies in Tompkins County. There's Dryden Insurance Company out in Dryden, very good company. Security Mutual Insurance Company, which is on Triphammer Road, up the road from the mall. And then on the other side of the lake is Finger Lakes Insurance Company, which is in Trumansburg. All of them very good companies, but they're small compared to the giants that you see, like the ones that are advertising on TV all the time, like the Nationwides and State Farms and Allstates and Travelers and Hartford and companies like that. They typically may have some claims adjusters, but if they also will hire independent claims adjusters to represent them. The public, if the public is having trouble with a claim, they will hire a public adjuster. A public adjuster is a company that represents the client against the insurance company. And like any other profession, there's the good, the bad, and the ugly among all of these. Some of them are very good, some of them are okay, and some are absolutely terrible. And this is why I mentioned that if you do hire somebody like that, you want to do something about getting some references. Here are some of the red flag issues, and I'm trying to get this so I can have questions and get done on time because I don't want to run over into the other thing. Insurance companies, because of fuzziness in the language, are trying to shift their responsibility to pay for certain damage, and this is what's held up a lot of the claims in New York, from their coverage to the flood insurance program. Is there anybody here who has not heard of State Farm Insurance? One of the biggest insurance companies. They just lost a major lawsuit from claims that go all the way back to Katrina. A federal grand jury in Mississippi just ruled against State Farm, and I'm not knocking State Farm for this, but they're the ones that lost it. They were trying to shift all of their claims over to the federal flood program for everything that happened out of Katrina. There were over 2,000 clients that they wouldn't pay the claims. One of the clients took them to court. And what was interesting was that 2 employees of State Farm who realized what was going on blew the whistle on them and turned state's evidence, I guess for lack of a better word, and their testimony was key in the middle of this. The result was that the federal grand jury awarded $800,000+ to this client against State Farm that they had refused to pay. What's going to be interesting about this is there's about 2,000 other clients that were sitting there waiting to see what the outcome of that trial was. And now they may just decide to settle, or they may all end up in court in a class action, who knows. But we're starting to, this has just happened again right down in Long Island in Connecticut, where there was a big fight with many insurance companies over whether it should be paid under their policies or be paid under the federal flood program. That's one of the things that we're starting to see that's to me, a red flag issue. Business owner disputes with claims adjusters. Business interruption loss is the loss of income. It is the most heavily litigated insurance claims of all the claims in insurance because of a number of things. First of all, people don't do a good job of figuring out what their actual amount of insurance is that they should have, and therefore they probably are underinsured. So then they start fighting with the insurance company over what they should be getting paid. The insurance company says you didn't buy enough insurance, so we're going to penalize you for not buying enough insurance by reducing the value of your claim. It's very complicated, and can result in litigation that can go on for a very long time. And here's another one that we see all the time. They think they have the claim settled. They hire a contractor to repair or rebuild the damage, and then they get into fights between the contractor and the insurance company over what should be paid and what isn't being paid. So because of all of this pressure that the insurance companies are under from these losses, they're getting tougher on all of these issues. So things to consider. Should you be purchasing flood insurance? Don't think you don't need flood insurance if you're not in a flood zone. All those people that were out through where Hurricane Irene went through, flooding. There are little towns out there, a place called Fleischmann's, Walton. Completely, their downtowns were wiped right out because they weren't in a, quote, flood zone, but there were streams and rivers that ran through the villages and towns that weren't considered dangerous, except that so much rain was dumped in such a short period of time, it turned those streams and rivers into real floods. It wiped out buildings, it wiped out bridges, it wiped out infrastructures. Remember what happened down in Owego not too long ago? I mean, that is a classic example of what I'm talking about. There were areas that were completely half a mile out of the flood zone that were completely underwater. So if you're in an area where it's even possible you could get flooded, I suggest buying flood insurance. If you're a business, take the time to sit down and accurately calculate what your potential loss of income is if your business gets knocked out, and also what your contingent exposure might be. And the bottom one, if I talk to the average business person and say, do you know what you're really getting covered for with that type of coverage? They kind of look at you glassy-eyed. I don't know, it's in there. My agent tells me I've got it. I guess it does something for me, but most people don't understand it. And as I said, the insurance industry does a very poor job of explaining it. So, if you have a claim, you need to have a clear understanding of what your responsibilities are for the claim. It isn't just up to the insurance company. You have responsibilities to know what you're supposed to do if you have a claim. Don't automatically jump to hiring a public adjuster. First, figure out if you really need one. I mentioned this story yesterday. My office used to be on Court Street, almost across from the county office buildings. And there was a building down the street from us caught fire. It was like a apartment complex, really. I walked down the street to see what's going on, and here's two public adjusters in a fist fight on the sidewalk over which one of them got there first and which one of them was going to get the client to sign up with them. And the cops had to haul them away, both of them. I mean, it is, some of these guys get to the fire before the fire department. They have these monitors in their cars and they're running around patrolling, listening for it. So, but if you get a good public adjuster for a very complicated claim, they can do wonders for you, but they can also wreck your claim. So make sure you get references and don't sign any contract with them that you don't let your attorney look at, because they can take over your claim and even take away your rights to settle your own claim by contract. So it's something that you need to take care of and look out for. I went through this kind of quick because I didn't want to run over into the next session. And so I want to leave it open for questions. I mean, I covered so much so quick. I'm perfectly happy to take your questions. Yes?
Well, I'm really glad that we're taking this so that we can share it later with other people, because I've been hammering that this is such an important session for people to come and get educated on. And I think it raises so many issues. There's an incredible moral hazard, that we're faced with the national flood insurance. The way, if we don't get firm, and I knew about the Bigger Waters Act, and I was glad to see it, because there are too many second homes and along the beaches and people building in places they shouldn't build and have rebuilt a few times, and it just keeps getting paid for at our taxpayer expense. And I really worry, looking at the increase in extreme events that we're likely to see, if insurance is not going to cover it, private insurance, there'll be the idea that we would turn to government to rebuild, rehouse, put infrastructure back in place. And that's more of our tax dollars spent in an already deficit era. At what point will that money stop and areas will just be left undeveloped? How much economic and racial segregation, discrimination will result in terms of who gets rebuilt and who gets helped with whatever tax dollars are available? I mean, to me, there's just this huge economic and ethical dilemma that we're faced with around insurance. And I'm wondering what kind of conversation is going on, maybe at the political level even, on this.
There are multi-million-dollar homes in very wealthy areas of Florida, for example, that have been rebuilt at the taxpayer expense several times. Because every time the hurricanes go through, they wipe them out, and then the federal government comes back in under their rebuilding program and give them the money to rebuild. So what incentive is there for them not to do it, as long as Uncle Sam is there to pay for their things? And this is all part of what's got to be corrected in the national dialogue. Yes?
My father owns some property down in Florida, apartment houses in Gainesville, when a big hurricane came through and there was a lot of damage. And he found that it was very difficult to purchase any insurance for his buildings at all after that event. He actually went to Lloyd's of London for his insurance because he couldn't get it. So not only are they raising the rates, but they're saying they're not available to certain clients.
One of my sons lives in Melbourne, Florida, just outside of Melbourne. And when he built his house, of course, he had to build it to the hurricane specifications at that time. And actually, his house, which was built 15 years ago, after Andrew went through, where they really toughened everything up, wouldn't meet the current standards for building in Florida, because they had to toughen them up so much more just to get insurance.
Right.
And I would suspect that the apartment buildings, one of the problems is that while they may be very well built and everything, probably don't meet the current standards that the insurance companies have for them to provide windstorm damage. It isn't fire, it's the windstorm that you can't get. And I do a lot of consulting for private country clubs all over the country. And in Florida, this is a real issue to be able to get them to standards where they can get insurance to cover for windstorm. It's a real battle. Yes?
Yeah, is this working for you? Yeah. Dave, you have a lot of expertise internationally as well. I think you've studied this to some
Yes.
extent on an international level. And one of the interesting things that has come out from Mark Hertzgaard's book, and he spoke on Thursday with this conference, is that in the Netherlands, they have really developed an innovative way of dealing with flooding, potential flooding. And one of the things that they've done is say very plainly to businesses and people who live in low-lying areas, we're not going to salvage this if if you get flooded out. It's just not going to happen. But they've said that I'm talking about the local governments in the Netherlands, have said that in a way that engages the local community rather than through a top-down approach. And this is all elaborated upon in Mr. Hertzgaard's book. I'm curious what you think about the insurance industry's role in trying to encourage people to not stay where it's not going to be feasible to live anymore, and what's the government's role? How do you see those balancing?
Actually, if you think about it, New Orleans is in exactly the same position the Netherlands is in. Most of New Orleans is below sea level, which is why they got hit so hard when the hurricanes went through there. And there are parts of New Jersey and there are parts of New York, around New York City and Long Island the same way. And what they're doing is where these places were wiped out, they're not letting them rebuild. But there's a very peculiar situation called grandfathering. If you exist, they really can't make you tear it down unless they pay you for it, the market value, and the government isn't really in a position to do that. So the insurance industry is taking a role in this with saying, okay, we got to tighten up building standards. We got to require more in the way of standards, or we simply can't insure these. Property insurance is written on a yearly basis. And so they can say, we're not going to renew you. You're on your own. So then the people got to think about, am I taking the risk by staying here? But from a practical standpoint, they can't just pick up and leave either, because they have so much equity in the property. If they can't have a way to get that equity out, they can't build someplace else. So it's kind of a chicken and egg situation. The best that we can do is, if areas get flooded out, and this is happening in some areas of New Jersey already as a result of Superstorm Sandy, they're not letting them rebuild. They're just saying, nope, you can't rebuild there. You're going to have to do it someplace else. And the same thing with New Orleans. There are whole sections of New Orleans. I was in New Orleans about 4 weeks after the Katrina went through, because I was down there working with a whole bunch of clients to try to figure out how they were going to recover this. It was one of the most devastating things I've ever seen, and there's no way that the pictures you saw could actually. Now think about this. They were bulldozing buildings with everything that was in them, asbestos, paint cans, whatever the chemicals were in that building, and stored in containers, loading it onto trucks, bringing those trucks to areas where there were ball fields and other open spaces, and using clamshell things to take it out of the trucks and pile it up. There were piles of this toxic waste and debris that were 5 to 6 stories high, out in the open where all the rain could come down through it and wash down through all of that. I mean, there are probably toxic areas down there that may never get cleaned up. And that's all part of what we're dealing with these extreme weather events.
Well, and another thing that we learned yesterday in our public health panel, I think it was put pretty well by a medical doctor there, it tends to be the rich people live in the hills. And so if we're talking about people being told that they can't live in the floodplains, it's often going to be the more vulnerable parts of our community. And this particular doctor was talking about Ithaca, and that near the inlet where there's lower income people living, those are the areas that are first to be flooded.
Mm-hmm.
Yeah.
You mentioned how our premiums upstate are higher because we're having to help cover the risk and the losses downstate. Dryden Mutual Insurance is this 150-year-old cooperative insurance company that came together before there were paved streets, et cetera, and we couldn't get our own fire insurance, so we had to make our own insurance company cooperatively. And I'm wondering if there's any kind of a move towards, as these rates go up for the high-risk areas, of people leaving entities like State Farm and Nationwide and form locally owned cooperatives and just sort of insure the risk pool in your own area. Is there any kind of a push for that?
I mentioned the 3 insurance companies that we deal with here, Dryden and Security, very well-run little companies, but they have to be very careful where they write. Dryden Mutual, for example, had a lot, and Security Mutual had a lot of business on Long Island. And fortunately, they were able to get through it all, but not without cost. And so they're changing their underwriting habits. So they are sticking to their knitting. In other words, they're staying more in the areas where they started out. They aren't spreading quite as far as they were. I mean, and they're not the only ones. Some of the big companies are just completely withdrawing from Long Island and Connecticut and parts of New Jersey.
We all might want to think about shifting our policies over to Dryden and Security Mutual, you know, if you want to keep your premium down.
Yeah,
perhaps,
they're one of the companies that we do a lot of business with.
Right.
And Security
They'll have
and
less
Finger
risk.
Lakes. Yes.
Dave, I want to thank you. I'm from Cortland, and actually, on an ancillary basis, I really appreciate your at least bringing up the environmental questions around the fracking issues going forward. That's going to be a critical issue for the, quote, self-insured corporations, which historically may or may not be in business as the same firm. Chesapeake goes to whatever. I originally signed the 188 acres a long time ago, have gotten out of the leases, but that company has changed 3 names in 10 years. Surprise.
A lot of the people that signed up, the landowners for these, weren't actually company people. They were like land brokers that were just sent out there by them to. We had them living here in Ithaca for almost 2 years, living in the motels and the hotels, so that they could go out and sign up things. I would be very surprised if I live in Lansing, out past the airport. I would be very surprised to see much fracking going on in our area. I just don't think it's going to happen. Not just because of the moratorium, but because now it's not hardly worth it to those companies to pursue it in this area because of litigation and all kinds of things. So could it come? It could, but I would be very surprised if it does, at least in our area.
My property is in Broome County.
Broome County? Oh, and they're gung-ho for it. What town are you in?
Town of Barker,
Oh,
between
yeah,
Whitney Point
yeah.
and Castle Creek, which
The
is
northern
close
part of it.
enough,
Yep,
but
the northern part.
Potentially vulnerable. I wouldn't dare put an anti-frack sign down there, frankly.
I had a quick question. I work for a company that has a large multifamily building on the side of the Shenango River in Binghamton, and Hurricane Irene hit us. We had about $80,000 worth in damage. We had to fight with insurance several times, and we ended up getting about $50,000. So we had this $30,000 gap, and we aggressively looked for any sorts of funding. And as it turned out, NYSEG asked for money from the PSC, about a $7 million money pot. Money originated from the system benefit charge and utility bills. And so they set up a program to basically pay additional claims that insurance didn't cover for certain properties, and it was all tied to where your NYSEG meters were. And I was just wondering, have you seen other examples of utility companies or other players continuing to subsidize the claims?
I think it could happen, but I don't think that you should count on it.
It's the moral hazard here.
What
we were
what
happy
type
to
of
accept the
business were
money
you in, may
because
I
of
ask?
the program, property management.
Oh, property management.
So it's a large multifamily building.
Mm-hmm.
We're very happy to get the money, but at the same time, it's the continued argument of, well, if you further subsidize it.
I have a daughter who lives in Johnson City, and the water was up to the second step of the stairs going up to her second floor.
Yeah, I used to live in Owego, and everything's wiped out. I mean,
Everybody down there now has a canoe.
yeah, they
It
do.
seems strange that NYSERDA
our system's benefit charge money was used to pay for property damage?
Well, NYSERDA doesn't control the SBC money. The Public Service Commission does. And so they basically, they set up NYSERDA to set up programs, and they give them, chunks of money from that, from the system benefit charge pot. They do get most of it, but another thing the PSC does, obviously, is regulate utility companies. So if there's a circumstance in which the utility company wants to create a program, they actually have the legal right to do essentially any program that would provide the same benefit that NYSERDA does. So commercial lighting is a good example. That's completely run through NYSEG and other utility companies that have those similar programs. So they're since they're the utility company and they have that on the bill, they're legally obliged, if they want to set up any program of that sort.
I understand, but so this wasn't money that was spent on property damage? It was
Oh, yeah.
energy-related equipment property damage?
It was property damage just so long as it was on a parcel that was serviced by a utility meter that paid onto the system benefit charge.
Well, that's a stretch.
Well, and that's the question is, if it's a money pot that's available, it was NYSEG essentially asked for it, and they got it. And you sort of wonder, well, are there going to be other players that continue to subsidize
And dip into
that sort of
pot
damage?
when it's meant for mitigation, not adaptation, the SBC charge.
Yeah.
You know?
Well, it's in the trouble. How do you define that sort of thing? I mean, the Public Service Commission obviously thought it was warranted,
Or
but
somebody who was politically powerful thought it was warranted.
it's very
Somebody
possible.
from Binghamton.
Any other questions? I've enjoyed talking to you today, and I hope that you're able to take something away from this that will help you down the road.
Absolutely.
Dave, thanks so much for being here with us, and we're delighted. Thank you.